What if I told you the growth you're chasing isn't out there? It's already sitting inside your business, buried in how you spend your time. In this episode, you're going to walk away with a completely different lens on growth. You'll see exactly where your time is leaking and how to reclaim it in a way that can drive real revenue. You'll understand how just a handful of focused hours each week can materially change the trajectory of your business. And you'll hear how AI is starting to close the gap between intention and execution in a way that finally makes scale feel achievable. We're also challenging the way most advisors think about growth because it's not about doing more. It's about building the right foundation so growth becomes the natural output of how your business runs. And we're introducing a forward-looking idea that could reshape how you measure success altogether, one that goes beyond revenue and gets to the heart of long-term enterprise value. If you're ready to stop spinning your wheels and start turning time into real momentum, this conversation is going to hit differently. I'm joined today by Tobias Donath, head of go-to-market and strategy at Fidelity Investments. Tobias has been at the center of some of the most impactful research on advisor productivity and growth, and what he has uncovered might just change how you run your business. Let's get into it.
Welcome to Disruption Blueprint with Shannon Spotswood from RFG Advisory. In this podcast, we help advisors grow their net worth, build their businesses, and maximize their independence. We've built an award-winning platform with innovative technology, comprehensive service, and a team of individuals who are experts in their field to serve advisors. Join us for this journey where we explore everything that has to do with running an independent advisor practice as we bring together successful advisors, industry experts, and innovative minds who are on the bleeding edge to challenge the status quo, foster new ideas, and create a path for advisors to unleash their growth potential. Now, on to the show.
Welcome to Disruption Blueprint. I have been eagerly awaiting this episode. We are joined by Tobias Donath, the head of go-to-market strategy at Fidelity Investments. And I'll confess it just right out of the gate. I'm a bit of a fangirl of the research that you're really pioneering. So this is just going to be an awesome episode.
Thanks for having me, Shannon. I'll tell you what, I'm super proud of the work we've been able to do and the team that we have here at Fidelity. It's amazing what you can do with great researchers and great thought leaders. And so this is a topic of passion for me, and I'm looking forward to talking to you.
Absolutely. I mean, from the very first introduction that I had to the research that you published in 2024, I felt like you had your finger on the pulse of some of the existential questions that advisors are struggling with and need answers to. And your 2024 research was titled The Time Value Equation, Optimizing Your Time to Unlock Growth. And it has become, I think, in certainly in the way that we use it with our advisors, really a foundational text for how the industry is thinking about organic growth. But before you got to answering that question, you released the first survey, which pinpointed that advisors are spending 60% of their time on non-revenue generating activities and only 40% of their time on activities that truly move the needle in their business and create enterprise value. So why don't you take us back to the very beginning and what problem you were trying to solve and what kicked off that game-changing research?
So I love that you're framing it this way. We're pretty proud of it, as I said earlier. I'm going to go back a little bit in the Wayback Machine. About 7 or 8 years ago, my predecessors built something called the Fidelity Value Stack, and it was this idea that said, "Hey, you got to go beyond just managing the money, and if you want to be an advisor who does planning and really generating and providing advice, you got to get up into peace of mind and fulfillment." And they did a really brilliant job of bringing Maslow's hierarchy of needs into the world that we live. But one of the things that kept us back there was no real roadmap for, okay, what do I do? Like tangibly, what do I do to move up that value stack? And so a few years ago, we built a program called Levers of Growth. And that was really about saying, look, if you're committed to organic growth, and if you believe like we believe that organic growth is the holy grail, it's the thing that will most differentiate you and most generate value long-term for you, then we got to show you how to do that. And we came up with the levers. You know, we know that advisors are all built different. And so it's not one recipe, it's what works for you. And that program, we had a lot of good research in it. I traveled around the country delivering the content in keynotes and in smaller group leadership meetings. And you got so much energy out of that. And there was so much interest. And then when I would come back and I would say, hey, tell me what's working. Tell me how it's working. I got a lot of, it all makes sense, but the same thing over and over again. It all makes sense, but I don't have time. And so we kind of sat back and said, we've done so much work to help people think about what they can do to be strong organic growers. And they're not implementing it. What do we need to do to help them with that? And really the time value equation is about how to help you overcome that primary barrier that we hear time and again from advisors, which is, I just don't have time to do this. So it's a really simple framework, right? It's trying to link value to time, and it's an equation, and it helps us think a little bit about the value you can generate is a mathematical function of who you spend your time with, what you spend your time on, and how you spend your time. And I think if you go backwards to how we built all these things, it's almost like if you can be more intentional about your time, you can focus on the levers of growth, you can climb the value stack and meet your clients where they are.
It's, I remember sitting and hearing you deliver that keynote about 60% of time being misallocated to these non-revenue generating activities. And you and I were talking after, and it's like, okay, now what? Like, how do you incentivize advisors to change their behavior? You're essentially asking, it's very easy, and I'm sure you've encountered this as you've delivered all these keynotes. It's very easy to talk the talk. It's very hard to walk the walk. It demands really a posture shift and deep work and thought around the organizational design of the advisor's business, the intentional way that they're building their calendars so that they're flipping from 60% non-revenue to generating to 60% revenue generating. And what I thought was so brilliant about the second piece of research is you gave very hard numbers. You kind of put the North Star out there of why this matters. So instead of it just being like, kind of what everybody knows to be true, because organic growth is virtually absent in our industry, despite the fact that we're living in a bull market for advice. So everybody knows this to be true, but then all of a sudden you unlocked it for advisors and put pen to paper, you put numbers on the board. And I'm just going to quote directly from your study, which is, if advisors allocated just 5 more hours intentionally to higher value activities, prospecting, deepening their relationships with clients, it translates into $270,000 of additional revenue. Like, advisors are leaving real money on the table by not being more thoughtful about their time. Once you started delivering that keynote and digging into and sharing that research, how has it shifted the conversations, and are advisors hearing you?
It's a great question. So I'm going to reflect a little bit on the first reaction I get a lot of around both the time that you referenced, 40 versus 60, and the dollar outcome. You get a lot of defensiveness, which is the exact opposite of what we wanted to create. When we put data and insight out there, our posture would be that it's about the reflective questions that you are hopefully generating for yourself and your own business. And so reflective questions that we should be thinking about are, where am I spending my time? What is taking me from spending it with clients and revenue generating activities? And is that appropriate? I think what's really interesting when you talk to advisors is this isn't a bad intent thing. It's not meant to be, hey, admonish, you're not doing the right thing. It's actually, hey, let's be aware we've made these choices. They're actually more intentional than you realize when it comes to time. And it's costing you money.
Yep.
And why don't we go over here and try something a little bit different? And so the advisors who embrace this the most will then say, okay, like, talk to me about how I should think then about my time. What are the ways that, we spend a lot of time on their mindset?
Yeah.
Like, where are you coming from? A lot of advisors built their business a certain way. How do you shift from what got you here to what's going to take you to the next level? And so a lot of our focus then goes on, if you can see past the defensiveness and say, yeah, more revenue generating activities will be better for me in my business, then we can start getting into the brass tacks of what actually to do.
It's so interesting, particularly, and we're going to talk a little bit about AI here in a minute, but in this moment that we're living in, that I almost am reaching this point where the X factor of success is hinging on mindset. Like, you can, there's tremendous resource to build a thoughtful business plan. You can make the right strategic decisions. You can have a real command over where you want to go. But if you haven't done that deep work on mindset, it does become this block to being able to unlock what you ultimately want to build and the enterprise value you want to create.
It's wild. Some of this research was us surveying advisors. And so some of it is self-reported. And so the way that our research will work is an advisor is self-reporting, but they're on our platform so we can see what they're doing. And so then we can say, okay, by anonymizing it, we can say, are the people who are saying something growing more or less than those who aren't? And it's really fascinating when you go out there and you ask them, are you being intentional with their time? And they'll only 39% say yes.
Right.
If you ask them, are you thinking about delegating, and a percentage will say, I actually know that I'm not doing that well. And so we have the statistics in the paper, but you start looking at this and you say, you're self-reporting these things. And then I can say those who report higher levels of delegation, higher levels of intentionality towards time and time management, they're actually just growing faster than those who aren't. And that's the type of thing that I want to bring to the community, to this industry, is this is a reflective place. Just look inward to you and your business and say, what do I want to change?
One of the things I love most about advisors is that their superpower is truly building trusted relationships with their clients and connecting with the prospects. And what I think is interesting about what you just said is that time is like sand through your fingers. It's just like leaking out. So they even may think they're doing the right thing for their business, or as the CEO, this is expected of me. You quantified this around, advisors outsourcing time in investment management, in marketing, in legal, in ops and admin, in compliance, in tech and cybersecurity. I bet if you asked an advisor, like, where are you spending their time, they wouldn't pinpoint all of those various areas, but that's exactly where it's going.
100%. Shannon, let me tell you a personal story. A few years ago, Fidelity offered me an executive coach, and it was interesting. And an executive coach in this case was really about your career and your work and how those are going to grow and develop. And the first questions were right where you'd think they'd go. What do you want to do? What does success look like? Setting that up. And then it went to, all right, let's look at what an average day should look like for you. And I'll never forget this conversation. It's about 5 years ago now. I said, what do you mean? I said, well, you should categorize what are the things you should be doing, and let's make them a certain color. And then let's make another color the things you don't want to be doing. I still color code my calendar today. And I look at every week and I say, is this the balance I want?
Right.
And if it's not, is this because I'm in a moment? We're in a reactive moment. We have some work we just need to get done, and it's not going to be the optimal. Or did I let my own biases, my own path dependency take me to what my calendar looks like? Am I meeting with people I shouldn't be? Am I engaging on topics my team could cover, etc.? And then how do I clean up my calendar to create the time to do what I'm meant to be doing?
So good. It's such good advice. I'm going to share with you a quote. There were two quotes that my father just like burned into my brain. And this is one of them, which is prioritize your time before you allocate your resources, and never forget your most valuable resource is your time.
I love it.
I want to switch to AI because I find this is just an incredible force multiplier on time. And you were so early in your time value equation study in rightly pointing out that advisors who dedicated intentionally 10 hours of their time to the highest and best use, which is deepening those client relationships and prospecting, and coupling that with AI, unlocking an additional 5 hours, took that $270,000 of additional revenue and really, put some pedal to the metal there. Took that 270 up to $541,000. So that was a year ago that you flagged that. We've seen AI, particularly in 2026, I think unlock even more optimization and opportunities for our time. So talk about how you kind of recognize that AI was going to be a pretty powerful lever for advisors, and then how you're thinking about it now with what we're seeing in the world today.
Yeah. So I'll give you two stats I think are important, right? 21% of advisors say they effectively outsource tasks or delegate.
21%.
Only 21%. And only 38% feel they use technology effectively, right? And so if our barrier to growth, us not dedicating the time to organically grow, is our mismanagement of time, then we have to start to ask, where can we do it? The fact that only 1 in 5 are effectively outsourcing, AI and many other things will instantly provide you with an opportunity. But I'm going to get to your question, but I think I want to take a step back and there are, depending on your lifestyle, let's keep the math simple. There's somewhere between 40 and 50 hours in a work week, right? Depending on where you are in the continuum. And if you're telling me you have to find 1 hour a week, 1 hour a day, every day of the week, or 2, it likely will lie in one of these two places. Somewhere where you can use technology to leverage what you're doing more effectively, and somewhere where somebody else can do something that isn't worthy of your time. Mm-hmm. So that's the first premise that clearly advisors need to think on. I think the second premise would be AI is a tool that is going to help us in a lot of different places. And so the first one, I think, is let's just talk about efficiency. And we're seeing in the surveys that we're doing that the highest points of adoption of AI are in places like note-taking, are in places like recording conversations and catching cues. We're going to continue to see that type of an opportunity area. If we're all honest with each other, that's going to give us better data to better serve our clients. But I wonder how many advisors really took the time to honestly sit back after a client appointment and write down everything they heard, put it into Salesforce properly. That's not where you're going to find time saving. I think what we're going to have to start to do is look at all the unique places where you can actually have technology do things for you that took you time.
Right.
So one of the early areas that we think are important is in meeting prep. Yeah. What does it look like for you to use the technology that's out there to do what took you an hour that you can do in 5 minutes, right? AI is moving in a direction where you have those capabilities, either embedded in some of the technology stack you have or in new ones that you have to bring in. And so I would be thinking about AI from that perspective first, not just the one that gives you convenience, like note-taking, but the one that will actually take the time off of your hands.
It is, we are early adopters. 2 years ago, we built a data lake, recognizing that being able to really standardize data and surface insights as a result of that aggregation was going to be a pretty significant unlock. So we've been able to have almost a running start as AI has unfolded this year. And what I love, and I keep saying I've got 2 kids in college and one about to enter college. And what I love about this and what I keep saying to them and what I keep saying to our team is this is a blue ocean moment. This is a time where the playing field has been equalized. And while you and I bring like decades of experience to the table, and that will certainly help us as we think about the application and integration of AI and these tools, it is a moment where, people can leapfrog in their career and disintermediate their competitors. They can think very strategically about how they want to build, but it is going to require, coming back to your mindset, it's going to require this optimistic mindset. It's going to require this I'm comfortable being uncomfortable posture. And what I think is so interesting about what you just said about the insights that will be uncovered in meeting prep and thinking about how to serve clients is we have a real problem in our industry where demand for advice is projected to increase by double digits. Like we are truly in a bull market for advice, increasing by 30%, according to a McKinsey study, whereas the number of advisors is decreasing by 0.2%. Advisors are going to have to serve more families along that generational wealth continuum. And, tapping into the research that you've done, I think it's the unlock. I think it is how you're spending your time is going to be the X factor.
I couldn't agree with you more, Shannon. And I think it's important that we think about AI also in a positive light. I remember the first survey we did going back to 2024, and the reflection was on, the specific question was, how many of you are using AI? And the number at the advisor level was 2 or 3 out of every 10. And now in our most recent one, we're at almost 90% who are using some form of generative AI today or planning to in the coming year. And so as an industry, we're making the move. I think what you're pointing out, though, is important, is how do we use it in the most effective ways to help us do our jobs more effectively?
Yeah.
I often think about this in beyond even just efficiency. I think about it very similar to the medical industry.
Mm-hmm.
If you play out what it was like for a doctor to have patients who came in and read all about things on WebMD.
Yeah.
Their interaction was very different thereafter. And you heard a lot of doctors talking about, I've got to change the way I engage. I remember reading a wonderful passage in a book written by Adam Grant, where he talked very specifically about a woman came in, she had just had a child and she didn't want to, this is all pre-2019, didn't want to vaccinate her child.
Yeah.
And the method of the doctor going in and saying, well, you should because
right
doesn't work. They have statistics that prove that you actually have a better outcome if you say, well, what have you read? What's your point of view? How are you thinking about it? And you bring them in and then you educate around that. I think we're in a very similar place with AI. And when I think about wealth management, people are going to start doing things on their own with AI.
Yep.
And we actually have to learn how to accept that too. If you are an advisor who hasn't gone in it and asked the questions your clients are asking you to Claude or ChatGPT, or pick your model and see what it gives you, and you're not learning how to think a little bit like your clients, I think you're going to fall further behind the 8 ball. So for AI, for me, it's not just about how you save efficiency time. I'd love advisors to think a little bit about what are my clients doing with AI and how do I make that part of my experience? How is that shaping how I engage with them?
That's such a good point. I want to touch on 2 things. The first is about, are you spending time with the right clients? This is really insightful work here, and it follows what we'd expect. 58% of an advisor's book is with high value clients. 42% of their book is with low value clients. That's exactly, in my mind, the ideal spread, because you want to have those next gen relationships, the beneficiaries. Like, you need to have that makeup in an advisor's book. But where this all breaks down is that time follows almost perfectly that exact same percentage allocation. So 39% of time being spent with low value clients, 61% with high value clients. And you've rightly pointed out that it really should follow the 80-20 rule, where you're spending 20% of your time with your low value clients and 80% of your time with your high value clients. Walk us through, that's so obvious on the face of it. And yet I see it every day when we do strategic coaching with advisors, the need for more fine-tuned client segmentation, designing the client experience to be reflective of that time equation. How do you help advisors think that through? And more importantly, get comfortable with delivering service differently to clients based on where they are on that percentage allocation?
So the first thing, I'm going to bring in another analogy from another industry. Think about the legal industry, right? You grow up tracking your time and then billing to those tracked hours. That's a structure that's in place. We don't come from that culture or that structure here in wealth management. There's a lot of feel. There's a lot of I've been there. And so the first thing I think is our mental model of actually being more rigorous about how we track where we're spending our time. And we have to find the tools and the capabilities to do that effectively. That's that first really important reflective part. I think, we're hopefully going to talk a little bit about the importance of a business plan.
That's
but that's
next.
An example. You got to be intentional, right? About your time. I think the second part to your question is once you get to that stage, is you have to understand your own path dependencies and biases, right? And so we think a lot about, I'll hear from a lot of advisors, well, rep is PM, that's my value. That's how I built this business. I serve people who are accumulators. I help them get invested. I was with a friend who's a member of a golf club, and I walked through the clubhouse, and there were two gentlemen sitting on the couch in the locker room arguing about whether they should sell this investment or not. And I get it. That there was a time where that was predominantly what we did. We have to shift it. And so I think mindset is most important. Mindset that you should be tracking your time, mindset that there are better uses of your time as you go through. And again, I go back to the stats. Delegating and technology are your friends.
Yeah.
And be honest with yourself. What is something you could have someone else do or a technology do just as good? That's not bad, but just as good as you would, and go spend your time over here.
It's so interesting. It's like, those positive motivational posters from the 80s, like the cat in the tree, like hang in there. While you were talking about that, I was just thinking of that, that age old adage of what got you here won't get you there. So that's the exactly business plan, I'm so glad you brought that up because that's exactly where I was headed. And you shared this with
Shannon,
me. Yes.
Let me jump in though.
Yes.
Just thinking about your clients. If you look at the propensity for the Generation X to want advice and advice type of engagement versus what the baby boomer is looking for. Part of our challenge is, and when we look at the books of business on our platform, you see that we are still predominantly reliant on the baby boomer. And that generation has grown up to expect a certain type of behavior, a certain type of engagement. But the Gen Xers, who less than 50%, I don't have the stat in front of me, have an advisor,
right,
are looking for advice and are expecting something very different, right? And so if you want to create a book that has a mix of older to younger clients, so you have a more resilient book, then you have to learn how to do what the Gen X is looking for to complement what the baby boomer needed to get to where they are.
Absolutely. I share this study all the time, and it's a few years old now, but it was some work that I think is a real eye-opener for our industry by Accenture, where they talked about what are the three things that a client is looking for in their advisor. Number one, do they share my values? Number two, do they get me? Number three, do I want to spend time with them outside the office? I think that's amped up on steroids, right? What is the most favored word of the next gen? Vibes. That's what the next gen is doubling down on. do you get me? Do you share my values? Do I want to spend time with you outside the office? And it is going to demand a very different posture and experience for the advisor to be relevant and to retain those assets as that generational wealth, transfer unfolds.
Totally. We had an incredible view of how important it is to be able to span that, because one of the strategies I hear a lot from advisors is, well, let me hire younger people to manage younger clients. And I think on its surface, I understand that. But an advisor, or at least an advisor's team, who has both the primary client, their spouse, and the next gen within their book of business, generates a significantly higher set of revenue to the tune of double than what they do if they only have the primary client as the person they engage with.
Wow.
And so I talk a lot to advisors about the importance of, you got to hire the right people and you got to build a team. But it would be like saying to a parent, it's great that you can talk to your friends in your age group in your circle,
right,
but you kind of do need to learn to talk to the partners, and you kind of do need to talk to your kids and grandkids if you want to be in relationship with all of them.
Yeah.
You have to learn to build that capability. And I think for advisors, there has to be some acknowledgement that there is value there.
Right.
You're doubling the revenue of that book when you engage with all three of the primary, the client, the spouse, and the next
That's
gen.
an incredible number. One of the things that I always share with our advisors as we're doing coaching, and this is, again, from your study. I mean it when I'm like a real fangirl. It's like I pull your data out constantly. Only 8% of clients say their advisor has spent time helping them with plan for healthcare costs for family, and then navigate major life events, facilitate productive conversations with loved ones about financial matters, manage family expenses. And why I share that with them, I'm like, when you're thinking about the value you bring to clients, good advisors, planning-based advisors are doing that in their sleep. They just think that's normal. Of course, that's what all good advisors do. They check all those boxes. They're helping you plan for expenses. They're navigating conversations, all these things that you flagged. But the reality of it is only 8% of clients say they're receiving that. So if the advisor knits all these dots together, where they're like, I'm going to spend the 2 extra hours a day deepening my relationships and prospecting, and I don't need to do anything Herculean. I need to have the conversation when I bump into a prospect about the value that I've delivered from these things. It's like, I always say, it's like gold is laying on the ground around your feet and you're just not picking it up.
Shannon, you and I are very similar in these views. I can only add, the number one thing I tell advisors is your clients of the future are already in your book. And if you're not effectively thinking about your book as your prospect pipeline, you're missing the biggest opportunity. Yeah. It's incredible the money we spend to pay for leads.
Right.
If we were advisors ask me all the time, they'll say, well, I don't have time to engage with the next gen. I don't know which of the next gen is actually going to be successful and which ones aren't, and who's going to get the money. The cost of a lead that you don't know at all, that you have no engagement with, the discovery, the work that you have to put in, is a fraction of just digging in and saying, all right, of Shannon, you just mentioned you have 3 kids. Let's 10 years forward. How do I talk to them? How do I at least introduce myself? Let me have a space in there. And my CRM should be evolving to incorporate that. My CRM should have, it's amazing to me. I ask advisors, how many of your next gen have you talked to? Well, I don't know. I'd have to like do the Excel math. If you're not in your CRM with a field, engaged next gen, had a separate meeting, and you can't start to diagnose your book with that, you're going to fall behind the advisors who are much more planning oriented.
Absolutely. Okay, so let's go to this business plan stat, because it's kind of shocking. I loved it when you shared it with me. So you mentioned that this is just so simple and so profound. Advisors who have a written business plan have 50%, that is 50% higher growth than those who don't.
Isn't that wild? It's this, on some level, all of this research is underpinned with that one stat.
Right.
The intentionality that comes with planning and then holding yourself accountable and checking yourself to those things delivers outsized growth compared to your peer set. Just that simple.
And what I'm going to create as part of releasing this podcast, because we do a lot of strategic planning with our advisors, is just a simple one-page plan. It's what I use personally. I learned it from this brilliant coach, Shannon Susko of the Metronome Effect. And we've taken that framework, which she took from Vern Harnish and all the great minds of strategy, Good to Great and all the rest of it come together. But I'm going to create as a downloadable as part of this podcast, just a simple one-page written business plan so advisors can start to have the framework. I have lived this. I love, part of what I love about my role at RFG is I do get to do high-level strategic planning with our advisors and help them chart the course of growth. And we do that annually. We're very intentional about the cadence and the metrics that we're looking at and the growth goals that we're setting and how we think about building the team around the advisor. So I've lived it. I can put my hand on that stat. And when you shared it with me, I was like, I've seen it. I've seen it in practice. And what's interesting about it, it's the write it down that is so critical. It's one thing to have in your mind, and our industry loves, I'm at 100 million, I want to get to 300 million. I'm at 500 million, I want to get to $1 billion. I'm at $1 billion, I want to get to $2.5 billion. We love the AUM stat, but the magic, the unlock, the organic growth comes from what are you going to do about it? What are the steps you're going to take? What are the OKRs that you're going to execute and report on and talk about and meet and miss quarter in and quarter out to be able to go from 300 million to 750 million or whatever the goal is that the advisor holds.
Yeah, I love that. And look, people will ask me, and I love that you're going to share a template. The simple thing on our end is if you take the time value equation, right? We said value is a function of time you spend with who, what, and how. And if you just took that at the very top and you said, all right, for everybody, it'll be different. Some people might say, I want to serve, I'm going to give an example. I want to serve ultra high net worth people.
Yeah.
Great. That's your primary. Other people might say, hey, I want to be in the alternative investment game. I think I have a better understanding of that. And you can pick, you don't have to start with who, you can start with what, but go through it. And at the highest level, say, who do I want to serve?
Right.
What do they need? And how do I want to engage them? I want to serve ultra high net worth people. They need more complex capabilities from estate planning to tax to alternative investments. And how do I want to engage with them? I need a higher touch, white glove type of service.
Yep.
Okay. That's my high level, how I'm thinking about it. And if you then turn around and say within your business plan, you should be getting to the stage that you just talked about. What are the things that will tell me whether I'm doing that or not?
Right.
And you should be measuring, am I talking to ultra high net worth people?
Right.
Are they the people taking time on my calendar? Do I have the product capabilities? Do I have the offering? And you can slowly this is the part I totally agree with you. Writing it down is the primary job. Almost as important as accountability and responsibility for it. Every quarter, check it. You said this, check it. Am I doing it? And hold yourself accountable. Nobody's checking my color coding on my calendar. I'm holding myself accountable to go where I want to be.
That's right. That's right. That's right. Okay. So you're working on, I guess, part 3, the KPIs of the future. We're going to do a little teaser here about what's cooking in your laboratory. So let's talk about why that is the next piece of research that you and your team are working on, KPIs of the future, leading indicators that actually predict growth, not just lagging revenue metrics. Can you tell us about it?
Yeah. So the team is hard at work at what is the research that's going to underpin this? What are the surveys and the work that we here at Fidelity need to do with the data we have and the data we need to add? And so it's really early. But what I can tell you is if we do our job, we're going to be able to come forward and say, for those of you who are overcoming your time barrier, who want to grow organically, here are the metrics you want to track that aren't currently a part of that metric stack that the average advisor is using. I was reading an article recently, and it was funny how it said, hey, we're going to double your revenue and your AUM targets. Go get them. And it's like, it's really easy to say from the ivory tower that that's what has to be done, and not give folks an ability to actually manage that in the moment, in real time. And so I'll give you some examples, things that we can be really proactive with. If we know, I shared the stat earlier, that you generate almost twice as much revenue when you are with a whole household, meaning next gen, spouse, and primary client. If that's true, then how many of your clients have you engaged to that level?
Right. And
setting targets where you're going to get to X% every quarter until you're at 100 or whatever your target rate is. Another one we think is really important is book resiliency.
Yep.
The part of my job at Fidelity is I lead a consulting team, and we do a lot of book analyses. The amount of folks who have books that will die off over the next 20 years and have no new revenue coming in is staggering.
Yep.
And so as a business leader, what is your book worth? You can't even sell it if you don't have that next generation of client. And we're thinking a little bit about like a resiliency score. What would that look like? And what percentage of your clients are at that level? So we're going to get really forward in thinking about what are real-time leading indicators you can measure on a monthly and quarterly basis that will help you get to that organic growth.
We are just so aligned on this. It's one of the things I'm most excited about what we're building at RFG, and obviously so grateful for the partnership with Fidelity. But we have as part of our mission statement is to help independent advisors build their business without compromise by driving organic growth to create enterprise value. Like, it's so important to us and has been such a touchstone for so many years that we put it into our mission statement. And what is really exciting about the advisor experience and the platform that we're building of the future is thinking about the advisor's single pane of glass and leveraging AI in this prompting framework where you can start to source this business intelligence very easily at your fingertips. So the work that you're doing on these KPIs of the future, we think are going to define the way advisors really start to not only analyze the value of their business, quantify their time, think about the organizational design of their firm, but they will become the guardrails within which you make decisions and the framework within which you make decisions. And one of the things that we're kind of chewing on and thinking about is, and I find this really helpful in some of the goal setting work that I do, which is, what is the one factor? So let's take the example that you used where you have the ultra high net worth client. Like, I vibe with those clients. They energize me. I'm excited when the phone rings. Why am I excited when the phone rings? I'm solving more complex problems. That's intellectually stimulating, interesting to me. I'm an expert in alternative investments. If you took that one step further and said, how am I going to attract more of those clients? Odds are there's some thread, right? Do you get me? Do you share my values? Do I want to spend time with you outside the office? There's some thread that you can pull. We've already been to the golf club, and so let's stay at the golf course. If you're meeting the majority of those clients through networking and your love and passion for golf, your one factor might be, how many rounds of golf did I play? It might not just be this quantifiable number the way we've always talked about. How many households am I serving? What is my revenue per household? What is my, all of the things that are, of course, important underlying KPIs. But if time is our most valuable resource and we can only process so many things, and I love in everything that we do with technology or marketing, we're always asking ourselves this question of like, how do we make the complex simple? How do you distill down this complexity into something that's very tangible? And I love this idea as AI becomes more powerful and we can surface so much more data of giving advisors like this, the one thing, what's the one thing I have to do?
Again, we've talked a lot on this podcast about how aligned you and I are. I think it is a life skill and a business skill to do what you just said. Get simple, get focused, get prioritized. And if our research is accurate, it's what people struggle the most with. And we should be spending lots of time on that, right? And what's the old adage, right? If you have an hour to solve a problem, you plan for 55 minutes and you get it right for 5 and you solve it. And, I think we do 55 minutes of triaging what's going on in front of us and maybe 5 minutes of planning. And if we could just switch that around a little bit, and find that one thing and really kind of drive down it, whether it's what you just said, it's a product, it's a capability, it's a passion, be honest with ourselves and drive that forward. Lots of opportunity out there to differentiate yourself.
I mean, I feel like, Tobias, that's like the mic drop of the mic drop. What a perfect way to wrap us up on this podcast. I obviously can't wait for the next piece of research, the KPIs of the future. I know we're going to link to both your 2024 and your 2025 study as part of this podcast. For anyone listening who has not crawled through the research, I encourage you to do so. Just such great work that you and your team are doing. And I know I can speak for a lot of people. We're immensely grateful for it. You're making us smarter and better business leaders and decision makers as a result.
Thank you so much, Shannon. At Fidelity, we are so grateful for the collaboration we have with clients like you, the ability for us to serve this industry. That's our primary job, our primary reason for being. And we love that this is resonating and is helping others grow and achieve the objectives that they set out to be. And you're at the very front edge of that. And so thanks for having me on the podcast and thanks for having this conversation.
Thank you so much.
Thank you for listening to the Disruption Blueprint podcast. Visit our website at www.rfgadvisory.com or schedule a call on our advisor resources page. And don't forget to click the follow button to be notified when new episodes become available. Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security or engage in any specific trading strategy. Information here may be provided in part by third-party sources. These sources are generally deemed to be reliable. However, neither our guest nor RFG Advisory guarantee the accuracy of third-party sources. The views expressed here are those of our guest. They do not necessarily represent those of RFG Advisory, its employees, or its clients. This commentary should not be regarded as a description of advisory services provided by RFG Advisory or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Securities offered by registered representatives of Private Client Services, member FINRA SIPC. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor. Private Client Services and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place. RFG Advisory is an SEC-registered investment advisor. SEC registration does not constitute an endorsement of RFG by the Commission, nor does it indicate that RFG or any associated investment advisory representative has attained a particular level of skill or ability.